podcast. Thank you.
Thank you. Thank you. So we have seen some kind of statutory or mandatory taxes like 34 AB and say like what you call land acquisition. But we are not considering property tax calculation properly. I mean, most of the values are not interested in property valuation since they think that it is not worthwhile to pursue, but it is ulta because you will get plenty of cases like court cases. Uh, so it's a very important topic. I think the topic subject is same, but I think both of you are confused topic name. It's all right. Same thing. Okay, let's start with the share scale. So, rateable value means upon which we multiply with some percentage. That is the property value. You can use the property value for land and building. We are concerned about immovable properties only. Patency, you can have property tax, copyright, anything. Mobile properties also, even jewelers. But we are consider about only mobile properties. So both ways you can use land and building or land alone or building. It depends on, state by state, it varies. The calculation varies from state to state. This is the main issue in property tax because you have to calculate separately in your area. Suppose in Bangalore you are using some method. In Mumbai, it is another method, but no much difference. So let's start this one. So as you know, property tax started with ancient India by Rajas and all. Then comes Britishers. They started collecting taxes from farmers. So these are the two things which we have to know about the ancient tax collection. Then let's go to fixation of tax. That is land and building, both. There are several, this is the main issue, several disputes are there in our courts where you valuers can say the client will approach to you for a proper calculation. You can ask your municipal corporation for an RTI, how they calculated it. Sometimes very high. So you can ask through RTI only, they will give you right to information. So after getting this details, you can work out. If it is okay, okay. Otherwise, you have to tell them this is the tax, the actual tax belongs to you. This is where the values has got his roles, assessors and values. So many cases are there. So because of course court's insistence, we have tried to, I will use the word tried to, uniformity in tax calculation, but still it is far away. In fact, valuation developed in India because of rating laws. Actually, it is see, it is used for rating laws means a rateable law. Same mean, which you can be rated. See, rent can be rated, capital value can be rated. All are ratables, as well as land acquisition cases. This there also, I think, we have. Let's see before that land acquisition case. So these are the two area in which, based on that, court has developed this kind of fine principles. The Honorable Court, see, it's an example. Honorable Supreme Court has recently, it's 2030, 2023, sorry, settled a long-standing dispute between the property owners and developers in Mumbai and Municipal Corporation of Greater Mumbai. It's called MCAGM. Is in relation to the power and entitlement of MCGM to levy property tax based on capital value. See, there are two types. You can calculate four methods. Depends on your that you can. I have given the last each and every cities. Cities only. The other semi-urban area you have to find out by RT only. So capital value system. That is capitalize it. Very easy. Capitalize it and you will multiply with the age. Age you have a factor. Location you have a factor. Structure you have factor if it is kacha, pakka or RCC permanent structure. All factors you multiply with along with the rateable value. Then you will get rateable value only. This rateable value you have to multiply with some constant, say 20%. That will be the tax portion. So both are same. Once you get the rateable value, you can easily find out property tax. This is called a capital value system as against the rateable value of RV system. See, there they are used capital value. RV system is very simple. You know it, but the short form is rateable value is based on rental. Okay. Now let's compare rateable value of property with the rent and capital value based on taxation. Prior to 2010, property was levied basis of rateable value, which was computed based on gross annual rent. Here you are using very simple. You have gone through maybe also how to fix the rent. It's not a standard rent. This is the problem in India. See, when you come, standard rent is superior to Transfer of Property Act. Just by heart it. Nowadays, it is considered as court also. Rent Control Act is superior to Transfer of Property Act. Rateable value of property, which was computed based on gross annual rent. Gross annual rent is equal to monthly rent into 12. That is annual rent, at which the property is actually let out. Or if not let out, the ground rent at which may reasonably expected to let from year to year, less a statutory allowance. Allowance will give 10%. Because after finding out rateable rent, you will deduct something for depreciation. So that is considered as 10% in some places. Can multiply by 0.1. or 10% of rateable. That is for repairs and maintenance, that 10%. Under capital value based taxation, this that is another one. Under capital value, see, finally we will reach at a stage fourth one. But without knowing these things, you cannot go to the directly go to the fourth one. That is unit rate system. Most of the states are using now unit rate system. But before that, you must know what is rateable value, what is capital value. Based the taxation. Property tax is computed based on market value. So you have got a ready reckoner, market value of particular structure. That will be given by plinth area basis or whatever basis. There will be a ready reckoner. Means they have got a list, municipal corporation. So from which they will get the value of the what they call structure. Various other factors associated with property as against the rental value. Year to year allowance for repairs and allowance of repairs increases actually. Starting with 10%, then 20%, 30% like that. As and when the age is on, age is increasing. Area of property user category, age, number of floors, and other factors specified. See, tell you what, when you are going through such a case, recently, of course, I got a court case, similar court case, but I was not knowing about these things, to be frank with you. Then we have to make so much computation because rules are changing. Even land acquisition rules are changed from 2013. Then almost all the rules, even 35 AB, capital gain rules are changing. So every changes brings more accuracy in the calculation. When you experience it, then only they will change it. So they will find out better way. Area property user category, age, number of floors, other factors. These are the common factors. Area of the property. If it is an what you call urbanized property or city property, your value will be high. User category. If you are given for tenant, again the value will be more because it is not owner occupied. So they are getting return also. Then age of the building, then number of floors, other factors specified. So number of floor means ground floor has got more weightage. The same thing, we are dealing with some terms and conditions in India. Property is land. It is the most common form of property along with the different forms. Land includes only land without any kind of construction modification. Actually, is it, in a vacant land, there should not be any construction. Here, the most important part I will tell you if you are doing financial institutions valuation. Suppose the bank gives you building number. It doesn't matter that it is a regularized one. Whether it is regularized or unregularized, they will take tax. Just to identify the property, okay, it's good and fine. Otherwise, it doesn't mean that it is regularized flat or a regularized instead of three floor, you might have constructed 4 floors. That also will get what you call uh, building number. That improvement made improvements means all the improvements, structure, everything made on the land. Then comes personal property. That is out of our scope. Then what includes the structural personal properties? These are all uh, we must know. Personal properties are under personal property cars, trucks, mobile, which are man-made creations but mobile are included in the personal property. These are personal properties. The intangible property. This is also out of our scope. This includes the objects which are not existent, like uh, it cannot be touched, copyright, you know, uh, etc. Royalties. In India, property tax calculation done based on property location. Location is an important factor. When property is in a uh, rural area, accordingly the property tax will be reduced. The amount of property tax differs from state to state. This is an important point. So you have to work out your own. If a case comes to you, if a assignment comes to you, you have to work out your own municipal corporation taxes, way of working. There is no fixed formula to do the calculation. This is the problem. Property tax has different corporation use different method to calculate property tax. So different corporation, uses different methods. So to find out the property tax, in that case, you have to find out the method of calculation from the municipal corporation. Then only you can proceed with your case. Firstly, an inspection of the property is carried out. Sometimes in luxury tax also it comes. Even though luxury tax is a indirect tax. Firstly, an inspection of the property is carried out. So the same thing. We do the inspections and where the property is located. Secondly, doing calculation property is to check the occupancy status. Straight away you go, occupancy status, you have to find out whether it is owner occupied or tenant occupied. Because these two changes, weightage. Then comes other considerations. These are the two main considerations. The other considerations are type of property. It is not safe for residential and commercial. There are so many variables. It is residential or commercial. Amenities associated with the property. Say, if place of car parking, feature of rainwater harvesting. The more parameters you use, the more accurate will be the result. But these are all there's minute differences. A future of rainwater harvesting, etc. Type of construction. Multi-storied, yes. This is an important point. Whether it is multi-storied, single floor, pakka, kacha houses. These three you have to take into account for these 4 items. So mainly, if you ask me, I will tell first is property location. Second one is occupancy, whether it is owned or own occupation or rental occupation. Third one, you can go for type of construction because it has got a good weightage. So now comes the formula. This is the formula by Kalyan Dominic Municipal Corporation. See, I cannot show all the places. So here and there, to know the subject, I have taken some other municipal corporations, BMC, Hyderabad. So here it is taken, Dombivli, Kalyan Dombivli Municipal Corporation. Property tax is equal to base value of the property. I have it. Property tax. It is asking not rateable tax. It is property tax. What is the difference? You have to multiply it with a certain percentage to get the property tax. So base value of the property, floor factor, multiplied by type of building, age factor, built-up area, category of use. So you got property tax as built-up area, say around 100 square meter. Type of building RCC, first floor. Age factor, that is the 10% as I told you. Sometimes it is 20, 30. Depends on the situation. Floor factor, base value. What is base value? So you have got built-up area multiplied by base value will give you the what it will give you? Base value multiplied by built-up area will give you construction cost, category of use. So this is the property tax for the Kalyan. This is the calculation method. Same thing, more or less same, all other areas. Now there are two critical points you have to. Definition of building does not mention anything about its approval or valid permission. See, definition of building does not mention anything about approval of valid permission or for construction. It can be said that building, whether authorized or non-authorized, will attract property tax. Whether you are using it, they will attract property tax. Even KSEB connection, same thing. Or your electric power connection. If it is given, okay, good. Well and good, you can stay there. But it doesn't mean that it is authorized. I have seen so many people, it is authorized. They write in the financial institution or banks valuations. Doesn't mean that it is authorized. You have to get building permit. Without building permit, whatever be the floor allocated, that has to be taken. Nothing else. Or even drawings. With the introduction of rent control, this is very important. With the introduction of Rent Control Act in 1947, it was declared superior to the Transfer of Property Act, especially in respect of rights of landlord and tenant. Here comes the player. Standard rent. Who will fix the standard rent? Court. Court will fix. Now you are getting 10,000 rupees. If you go for standard rent, it will be 100 rupees. So naturally, the rateable value will be less. Right? So standard rent means court will fix. And sometimes it goes on for freezing method. That means uh, for a period of certain period of 15 years or 20 years. So that will affect property value. Thereby, local authorities could not increase rateable value. So rateable value they cannot increase down because of standard. You cannot go beyond standard. So it's a, also remain frozen. It is for a longer period. They freeze it. That standard rate. So rateable value is nothing for 15, 20 years. Same rateable value. Next one. I hope you can follow my class. Okay. I'll show you some illustrations also. Have to find it out. All those things. But before that, we will go to some theoretical part. Now, illustration based on court judgment. So, illustration based on this is a court judgment. If the value of the land is 4 lakh, so value of the land, whatever be the extent, depreciated building value is also no, 16 lakh. That means depreciated. Let's replace the value minus depreciation value. It will give depreciated value. Any doubt, please ask, because those who are not familiar with the bank valuation, this will be a bit tougher for you. I hope most of you are doing some kind of valuations. Even before IBPA, exam pass, right? If the value of the land is 4 lakh and appreciated value of the building is 16 lakh. On inquiries and investigation, relevant yield is found 4%. So that means from looking at prevalent yield, that is what yielding, you can find out almost this is such a locality. Just for the sake of understanding. See, 4% for a apartment means it's pretty good. That means it should be a urbanized area or semi-urbanized, semi. Okay. Because 4% is pretty high. To be frank with you, it should be between 2.25, 3 to 4 for high, good locality. Whereas in commercial, it go up to 6%. These are all thumb rules. I am not telling 6% for a commercial. Then 8% for industrial. If it is a urbanized area. So this is how you capitalize. Once you get the yield, it is easy to suppose you are 6%, 4%. You can see it. Here the gross rateable value is 20 lakhs. Add together 4 lakh plus 16 lakh. So 20 lakh. 4 by 100. Not 100 by 4. So 4 by 100 means 80,000. That is his annual income. Net rateable value is 80,000. As I told you, 10% is to be deducted for repairs and maintenance. So deduct that 10%. So you will get 72,000. So that is the rateable area is an amount of annual rent which land and building might reasonably expected to fetch. Reasonably. Actually, this rent capitalization method, this is one of the A plus point and minus point. It is easier, but it is office work. At the same time, it may go wrong if you put instead of 3%, 4%. If you put 3%, the whole calculation will be wrong. So might reasonably expect. This is reason. That's for the word reasonably expected to fetch. So KP work is judgment. What is that? That is, you can have a difference of 15% from one value to another one. 15, 1, 5. So that is reasonably fetched from year to year. Less 10% of such rent as per municipal act. This is municipal act, 10%. The amount is what hypothetical rent reasonably expected. This is the amount. You can divide it by 12. Reasonably expected. There also, see, this is not that, it is simple, but go through it thoroughly. See, again, it should not beyond standard rent. Standard rent is the baseline. You cannot go beyond standard. So, this illustration is clear now. What hypothetical reasonably expected? Okay, the municipal act. Now we have a Latin word. Principle of reversing stantibus. This is called a principle which is we are using in all calculations. Whatever be the condition, you value it. Yesterday it was like this, or future, the structure will be like this, future development is like this. You cannot assume anything in this as per this principle. Whatever way now it is existing, that only you can value. Now suppose the builder will build another floor in future. You won't consider it. There is a good examples. The phrase rebus sic standus, things that standing, is a Latin phrase that refers to a situation where a contract cannot be withdrawn from or terminated as long as conditions and circumstances surrounding the contract are not fundamentally changed. This is the thing. Conditions and circumstances, the surrounding, the contract is not fundamentally changed. According to the rating law, every property has to be assessed. This means, this Latin word means, every property has to be assessed as it exists at the time of appraisal. As it exists at the time of appraisal. While all existing circumstances neither past situation nor future benefits. So past is not considered, future is not considered. When you do for rateable value, you need not consider this. Why this has given? Very easily you can explain. See, in 1970, one ground floor is constructed. And you are already put your calculations and property taxes. Okay. Now, there may be a situation after 95. he will construct another floor. So what happens? Here the floor land is taken twice. First in ground floor, then again in second floor or first floor you can say. Okay. So two times you are taking, it is not possible. So minus it. That is the condition as it exists at the time of appraisal. You calculate for, otherwise this will be more ground floor. So take away the ground floor and you calculate for first floor. Then the same land value given to ground floor. Got my point? Because already taken twice. One is we have taken with the old rate, maybe 300 per square meter. Now it is 1,000 by square meter. So you don't want to take this 300. Instead, whatever you have taken in first floor, maybe 1,000 square feet, you add it to the ground. The important point. These two are important. If you have any doubt, you can use your chat box or more participation, whatever. Depends on time. Okay. Now another illustration for this particular principle called Rebus-Sick stand piece. Okay. That illustration. You see. A multi-storied building stipulated in a municipal corporation. Situated in a municipal corporation. The ground floor is constructed 1965. Then the land rate was 500 square meter only. See, ground floor in 65 is only, at that time, land value is only 500. Subsequently, standard rent and rateable rent is fixed, already fixed, because he has completed the job, 500 square meter in land. So he subsequently fixed the land tax or property tax. Later, the promoter constructed first floor in 1980. Here, the crux of the problem. 1980, he again constructed. He got permission. So 1980, he constructed. When at that time, the land rate is 800 square meter. So 300 is increased. It is understandably clear that the landowner should get fair and equitable return, right? Otherwise, he will pay gold and the ground floor more and first floor less. And get fair and equitable treatment on the potential value of the land. That potential value is called 300. That is 800 minus 500. So what they will do? It's a fact that the land value cannot be taken twice. They are taken twice, the ground floor and first floor. In fact, the land value cannot be taken twice. At the same time, it can be disregarded that during the time gap between two floors, potential value of the land is increased. Standard rent to be fixed for additional construction. Why standard rent is good? Because it is 65. Standard rent comes in January 67. There are so many minute things. The time gap between two floors, potential value of the land is increased, standard rent to be fixed for additional construction. So if the land value is totally excluded while assessing second floor or first floor, you can say, it may lead to a situation rental value GF is higher. Because you see, here 67 is the Rent Control Act. That means standard rent. It is less. Whereas in first floor, you are getting pretty good rent also. Maybe 1,000, maybe 20,000. Now, when you calculate, first floor will be less, whether it is new or not, because the Rent Control Act has come. If the land value is totally excluded while assessing first floor, it may lead to a situation rental value of ground floor will be higher. I hope you can follow. The approach ignoring land value potential is also against the principle of basic standards. Under this principle, value referred to as rental value at present. It is reasonable to deduct land values are already considered. So everything is going to reduce, right? Because rental value at present is to be considered for your ground floor also. Retrospective effect, it is called retrospective. Whatever land standard rent is fixed for first floor, you have to fix for the ground floor also. So whether it is less or high, it is not a issue here. Here our concern is only 2 times land value is taken. Suppose instead of 65, in 1970 it is constructed, ground floor. Then what you will do? You will get a good profit. These dates are, no, you can change according to standard. If you want to avoid standard rate, you change it 1970. Okay. It is a fact that the land value cannot be taken twice. God cannot neglect the time gap of first stage and successive floor construction. The potential value of the land has increased. Landlord cannot be deprived of fair return. See, there also court has given a ruling. First floor, the land, when you construct the first floor, the land value is increased. But court has to see that one also, that point also. So what will happen? Potential value of the land has increased and landlord cannot be deprived of fair return. Landlord will not get a fair return while fixing the standard rent of additional construction. When the land is 500 square meters, construction cost of ground floor is 1965. Rateable value of different in comparison with the first floor value, which is construction 1980. This is against the principle of land. So anyway, you cannot change the law. Now, this is a subtopic, contractors law or contractors method. Not a property tax or rateable value method. Or to find out property tax or to find out that property tax. This is a particular method in which you are going to array land value or building value. Okay, let's see. After this, you go through it. Okay, I don't think much study materials are available on this subject. So go through thoroughly. Whenever you are in doubt, you can ask. If there is no rental instance available in the locality where the unusual property comes up, here an unusual property comes up like a mall or not common type of building has come up. In that case, we don't have any precedents of land rent fixation. The authority will have to resort investment theory. Same thing. Formula is equal to property value is equal to composite cost of site. We know it, property value. Cost of site plus present cost of construction value. So generally used for new buildings. So present cost of construction and as usual minus depreciation. Say 1 or 2 years. Cost of the building would be mentioned on a what per square meter basis, and depreciation rate has to be one that is reasonable and prevalent at the time of valuation, incorporating the cost of remediation and site preparation work and any other addition. Here, when you calculate what you call valuation, cost of remediation, that is cost, you must add cost of construction along with the soft costs, additional fees for architect, all those things, and land uh, preparations, everything. This method is based on cost approach and used to a value new or recent. You can use only for new buildings. This contractors method. You cannot use for 10 years structure, because then the whole thing will be, it is very difficult to find out cost of construction. Cost of construction before 10 years, you cannot derive easily. So generally it is used for 1 or 2 years. Now let's go to 5 steps of contractors method. There are 5 steps, same thing. Easy. 1. Estimation of cost of construction. That you can do. Deduction from cost of construction to allow age, obsolescence, and other factors necessary to arrive effective capital value. If you want, you can a small deduction can be given because it is new building. No, estimate the cost of land easily. Apply the market rate at which money can be borrowed, or here it is again yield rate. How will you find out yield rate? Because you don't have any precedence or you don't have any comparison in this case, a special type of building or special type of land, special type of locality everywhere. So you don't have any uh, precedence for that. So what you will do, yield rate you have to find out. So apply the market rate at which money can be borrowed or invested to the effective capital value of the building and land. So whatever the bank provides you to get back your capital, maybe 5%, maybe 5.5%, that you can take it as what? Yield rate. Earlier we have done yield rate by trial and error method. 8% for industrial project, 4% for good buildings, urbanized building. But here you cannot take like that. So you will adopt whatever the bank provides to get back your yield rate. That you have to find. Then 5th one is recheck whether the result for page 4 really represent what hypothetical tenant would have rental tenancy on statutory terms and make any adjustment necessary to interesting. Ensure that no higher rent is fixed as base of assessment. See how many small points. See, whatever yield rate you got, you multiply by it Then you have monthly rent. This monthly rent should not increase more than standard rent. What is standard rent? 4. So whatever you are doing the calculation, it depends on standard rent also. You have to compare with the standard. It should not go beyond that. Okay. Now let's go to capital. Now rental basis. Now capital value basis. Invalidating rate loss from rental value. This is immediately invalidated the rental issue because rent has got some problem. What is the main problem? Rent Control Act. So let's go to next step. Capital value. Rating of premises on the basis of capital value. This scheme is already approved by Mumbai Municipal Corporation and fully implemented in Mumbai. This is MMC has adopted this. Properties are classified as open land, residential, commercial, industrial as per Mumbai. Properties are classified like that for 4 items. Then capital value is equal to base value into built up area. Now, if it is a new building, a residential area can be easily surveyed in site with both the parties. Or if it is an old building, you can use it. Carpet area plus 20%. Build up area minus 20% is carpet area. So carpet area plus 20% will give you build up area. User category. See, small changes are there. User category, nature and type. This you need not by heart. They have this all this constants with them. You just multiply. That's all. And get your fees. Nature and type of building and age factor into floor factor. See, what the factors are there. Now you find out property tax is equal to capital value. You already find out, no? By the using above formula, base value into built up area, user category, nature, and type of the building, multiplied by age factor, by floor factor, all you do, then you will get capital value. Then you can find out particular rate of tax, whatever it is, around 20%. Property tax you will get. Okay. Now let's go for an illustration for this type of problems. A newly constructed RCC frame flat 2016 having 90 square meter built up area on second floor is having a rate of 1,400, 1,40,000 square meter as per ready record. Tax rate is 0.765. Not in Bombay, it was 0.349 in, I will explain to you, 0.349 during 2010, 2014. Now capital value, you find out how much is that? 1,400 into your 10% you have to deduct 0.9. Then all others are what? Because all are good place. Mumbai itself is a total urbanized area. So 111. So you will get 1.26 lakhs. Property tax of the flat is equal to, see, here it is written, tax rate is 0.765. Just before that, it was 0.349. Court has revised it. These are all available in those books. So you can directly apply it. Once you go through this, easier for you. So you multiply it with 0.765. So you get per annum 96,390 per square meter per annum. Now, a more what you call realistic approach. Now we have found rateable value, capital value. Now comes carpet area based rate of rate. Okay, carpet area based. In our place, it is carpet based. Very easy. More genuine and logical method. This is genuine method. Simple and straightforward carpet area can be measured jointly in any dispute. Any dispute comes, come on, let's measure it. So carpet area can measure. In 99, Ahmedabad Municipal Corporation formulated. Actually, Ahmedabad Municipal Corporation formulated this. Introduced the system for property tax assessment. The immediate consequence of the amendment was delinked Act from Rent Control Act. There is rent, nothing is the capital, no. So it is delinked. It is now rent capital control is completely abolished. Instead of that, this one has come. Because in carpet area, there is no meaning in rent control act. However, user aspect, other things are same. User aspect, locality aspect, age aspect, etc. are also considered. Now in New Delhi, Bangalore, Kolkata, Hyderabad, Patna, Ahmedabad, property tax is calculated by fixing a price for unit value of the area. Same thing, unit value. Municipal Corporation of Delhi has developed an online calculator to evaluate property tax on basis of type of location, type of construction, amenities available around. Okay. It also factors in the annual value of the property, which is derived through following formula. Here the formula is annual value is equal to, we are going to covered area, carpet area. Okay. Here they are using covered area. Sometimes basement floors are covered. So they use the word covered area. Annual value is equal to covered area into unit area value multiplied by age factor, user factor, structural factor, occupancy factor. These factors may change slightly here and there. Okay. Don't worry about it. However, Delhi government has given a rebate to certain classes of citizens, like senior citizens, women, physically challenged, ex-servicemen, group housing flat owners, and CGHS flat owners. CGHS means Cooperative Group Housing Society. They are all, they deserve deduction. This rebate is as high as 30%. They will give a rebate of 30% of the property tax. Now, unit area, UAS means unit area system. Unit area, you see A, B, C, D. Okay, stop there. Now, what is a structural factor? In structural factor, structure type pakka. If it is pakka, 1 point. If it is semi-pakka, again 1 point. Now kacha, 0.5. These are the marking system. B, age factor. Let's take age factor. For rebate on age buildings, this is why I told you sometimes it is 20, sometimes 30. Year of completion prior to 1960. So before 1960, then 1960 to next 10 years, 69, then 1970 to 79, then 1918 to 89, 1990 to 1999, and above 2000. What is the factors? 0.5 for 1960. Then 0.6, 0.7, 0.8, 0.9. You see, finally 2000, it is 1. Just multiply it with 1, finished. Just multiply it with 0.5, finished. Occupants factor for tenant occupant. Every category A, B, C, D, F, G, H. Whatever be the type of property, if it is tenanted, you can use 2, double. Instead of 1, it is 2. Now comes use factor. For non-residential buildings, so building 1, 2, 3, 4, 5. Residential 1, public industry 2, recreational 3, small hotels and shops 4. Then comes Star Hotel 5. Star Hotel has got the highest property tax. But nowadays GST regime is there. So naturally stars doesn't matter actually. They charge GST is applicable. Some idea about GST. Not for AC rooms or anything. Whatever beverages and food you are taking. You got my point? So this it is not for room wise or anything. The beverages you are taking or food you are taking, they will charge GST. Same GST, okay? Not for hotels or not for shops. Then user factor 1, 2, 3, 4, 10. That is given for Star Hotel. It is given 10. Rate of tax is 10% for residents, 15% for non-residents, and 20% for hotel. That you can multiply. So once the 1, 1.5, 2, as it is increases, your tax burden is also increases. It is 10%, 15%, 20%. Okay. Next, an apartment of, I am giving illustrations. I will tell you. When you go through the theoretical part, you won't that much understand the topic. When the illustrations are there, it is easy for an apartment of ground floor plus 2 constructed in 89. Ground floor carpet area is 80 square meter, is used for shop and let out basis. That is rented. Ground floor. First floor is as residence. It falls on a locality of Kolkata. So where did you give specify? Okay, let's specify it is for residence. Because second floor is also residence. Okay, it is not given. It falls on a locality of Calcutta where unit area value is 600 square meter. So you got unit area value. You know unit, how much? 80 square meter. Unit area value is 600. Multiply it. Second floor is built in 94. Second floor is coming. It is built up in 94 and used for residential purpose. So whatever our assumption is right. So it is for residential purpose. Second floor. Rateable value and property tax is worked out as follows. Okay. Now, just listen. Okay. Ground floor is equal to shop, right? For shop, we know that 80 is the carpet area. Two is for what? Tell me. Now you have to tell me. What is 2 here? What is 2 here? The 2 is for tenanted properties. It is left out. So everything is 2. Right? Then what is 0.8? Go back. It is constructed somewhere in 70s. Okay. So 0.8. Somewhere in 80s. Okay. Then one is okay. That factor. Then utility factor is 4. Shops are 4. Yeah. Small shops are, hotels are 4. So rateable value is equal to locality rate into unit rate into multiplying factors. Various multiplying factors. Okay. We are going to calculate together. So 600 into 512. 600 square meter area is available. Into 512. That 512. Same thing. Ground floor shop 512. Okay. So 600 into 512. You need only property tax. Okay. Now residents are there, shops are there. Now 2 residents. That is 600 is the area. No change. That is 74 plus 72. What is that? First floor 74 and second floor 72. Add together. So you will get these two. If you multiply, you will get 3,07,220. 200 for shop and rupees 81 tax 60,000. $81, 600 for residents. So proper tax for shop is 15%. It is given 10% non-residential. And property tax for residents 10%. That is only 8,160. Yeah. So these things you need not by heart. get the municipal property tax book or whatever the circular and apply it. Yeah, exactly. Yes. Now, what about Pune? Pune Municipal Corporation provides an online property tax calculator in which you can fill the following details. Same thing, that is the online calculation. Location, area, use factor, usage factor, type factor, time, area factor, construction area. Just I'm mentioning the main important points only. Otherwise, we won't get time. Okay, this is the Pune Municipal Corporation. Now, BMC follows capital value system, we know, to assess property tax. BMC calculates the property tax as a product of capital value of the property. Current property rate is the weight of use of capital percentage. The Maharashtra government has accepted residential accommodations up to 500 square meters within the the Mumbai municipal area limits from property tax. So up to 500 square feet, Maharashtra government has given exception. This small things you can. This is also available in books. Simple corporation books. So 500 square feet we cannot tax. The Navi Mumbai Municipal Corporation, that is NMMC, collects the property tax at a certain percentage of the rateable value of the property. Here it is again rateable. That is based on rent. Now, Brihat Bangalore Maharashtra Nagarapalika, BBMP, follows a unit rate value for calculating. See, this is the formula. Property tax is equal to PT into, don't worry about formula. Property tax PT, that is equal to G minus 1 into 20%. Where G is equal to A plus B plus C. And I is equal to G multiplied by H by 100. Okay. The G is gross unit area value, A is tenanted area per square feet, into 10 months. Here it is the difference is 10 months, not 12. 10 months. Bangalore. B is self-occupied area property into property per property area multiplied by 10. Same thing. Vehicle parking is only given in the here, what I call Bangalore. That is also for 10 months. Depreciation rate H. That is why the just G multiplied by H. And then it is depreciation percentage. Depending on the property, sometimes it is 10, sometimes it is 20. That's all. Okay. Same formula. Only difference is 12 months. Instead of 12 months, it is 10 months only. Now, Greater Chennai Corporation, CCC, uses a reasonable letting value system for assessing annual property tax. The CCC consider the following factors: plinth area, they take. Basic rate for the street in which property is situated. They are much interested in street because streets are very important in CCC locality. Building usage, again, whether it is residential or non-residential. Nature of occupancy, that is owner or tenant. Age of the building. Same thing, same formula repeated. Now, Hyderabad. The Greater Hyderabad Municipal Corporation follows a taxation slab rate for residential properties. What is that? The GHMC uses the following formula to determine the property tax. Annual property tax is equal to plinth area, again plinth area of the property multiplied by monthly rental value per square feet. Again 12 is given. Then 0.17 to 0.3 depending on the MRV. And based on taxation slab minus 10% of depreciation. %8%. The library charges. Yeah, I done it. It is not this one. Depreciation is 10. 8% again added for library charge. So some kind of cess. Okay. Now Ahmedabad, you have done it. No. Ahmedabad Municipal Corporation determines the payable property tax based on its capital. The formula for using is property tax is equal to area into rate. What is the rate? Property tax rate. 20%, 50%, whatever. I1 into I2 into I3 into I4 into IN. I1 is importance given to the location. Okay, I1 is importance given to the location. I2 is importance given to the type of property. I3 is importance given to the age of the property. I4 is given to importance assigned for residential property. Now the suspense. IN is equal to importance assigned to the user of the property. Okay. User of the property means it is owner occupied or rented property. That's all. Now let's see another problem. This is the last. In this section. Baki, you can see this one. This is a typical case of factory. On a government land in an urbanized area, a factory building is constructed for rupees 600 square meter with a construction cost of 55 lakhs. That by is business. So the construction cost is 55 lakhs. Land value is 1,350 per square meter. So here it is lease. Okay, that is Government will provide, this is provided by government. So tax will be also the same. You did not go for standard rent and all. Because it is government property, government will charge anything. On a government land is an urbanized area, factory building is constructed in 600 square meter with a construction cost of 55,000. The land value is 1,350. See, land extent is not given. The lease premium granted is 12 lakh. Okay. That's not a mistake. Sorry. So premium is 12 lakh. Estimate the fair net rateable value. So you have to find only rateable value. Here, land value is 15 lakh. It's 12 lakh actually. So land value is 15 lakh, building value is 55 lakh, total value is 70 lakh. A factory in an urbanized area, see, factory in an urbanized area, as I told you, factory in an urbanized area is rate of return is 8% highest. More than that, very rarely goes. So 8% full rate yield rate is given. So a factory urbanized area rate of return is 8% is considered fair and reasonable. So you calculate 70,000 multiplied by 8 by 100. That is 8%. That will give you 5,60,000 per annum. You have to deduct depreciation, not depreciation actually, cost for repair and maintenance. That sometimes varies as the building is older. So you get a net rateable value is 5 lakh for 4,000 rupees. Okay. Now land tax. This is more or less same. Actually, we immobile properties, some state calculates land tax and property tax as same. In some state, it is land tax and property tax differently. Actually, see, land revenue tax is being paid on the purchase of the building. In some states, land tax is a tax on the value of land itself, regardless of any improvement. Property tax is a tax on the value both land and improvement. See, building tax we calculate in some states, and sometimes separately land tax or property tax. It is also called property tax. Land tax is also called property tax. So building tax and land tax is calculated separately. In a few states, property tax is land tax, and anyone who land in Kerala should pay this tax to village office. So in Kerala state, it is different. Building tax you pay, then you pay land tax in village office. Building tax is for building construction in the land. It will go to Panchayat, municipality and corporation. In a few states, property tax and building tax are different terms that refer to different aspect of the tax related to real estate. In summary, Land tax is a broader tax. Property tax is a broader tax on overall value of the property because it contains building plus land. That is why overall value of the property. While building tax is a specified tax, that is only building part related to construction of building structures. Uh, Therefore, this uh, topic. If you have any doubt, you can ask. Then we have an indirect tax also that we'll see. That is called luxury tax. This is very simple. One page you can finish it off because nowadays it is GST regime. So highest bracket is 5-star hotel, 28% they will charge. If you drink a coffee, they will charge 28% from a 5-star hotel. Not for rooms. They won't charge. Now without AC, it is 12%. With AC, it is 18%. Now lodge, clubs, etc. below 1,000 tariff. If tariff is below 1,000, they will charge 5% or the other beverages or whatever. Food. Tariff between 1,000 and 2,500, they will charge 12%. This is just to get an idea about GST. Otherwise, I won't include this one presentation. Okay. Because this is an indirect tax not connected to income tax department. All others are income tax department. This comes under indirect tax. Whether or not the lodging offer the rate taxation, the rate of taxation is generally dependent on revenue and it the rate of taxation is generally dependent on revenue. What is revenue? Your coffee, not that building. And whether it is air conditioned or non-air conditioned, up to 2017 rule, and the VAT system was there. Currently in India, tariff it is depend on revenue. So it is the conclusion of this session. I think we have more time. You can have more participation or edit out. You can ask. Check first chat. Oh, that's doubt means I am afraid. Question. Question. Any Q&A? So this, in short, this is how we calculate property tax. As I told you in the beginning, we value as neglect this portion. Generally, how to calculate property tax. All other things we learn. 34 capital gain. Land acquisition or any other statutory or mandatory valuations. But property tax has not given much importance. Whereas, if you are lucky enough, you'll get a good case of property tax. So in that case, you cannot say I don't get a circular from your municipal corporation. If you request, if they give, well and good. Otherwise, you can put an RTA, right to information they will provide. And you cross-check it, whether which method they have used. Is there any wrong in that method? If it is they are charging higher, you can go for court. Same thing in land acquisition also. There are so many cases in land acquisition. It is also a very what you call remunerative as well as satisfying experience if you are doing that. Don't depend on FIs, financial institutions. Nowadays, as you know, banks are reducing our fees like anything. So go for new pastures. You have plenty of pastures now. Even ESG is going to come. Then you have this one, capital gain, land tax, land acquisition, property tax, visa. So many other avenues are there. So don't worry that you are, don't go for cheaper bank fees. This is what is happening because unhealthy competition. Of course, new IBBA fellows want to do something, but it do not need, see, IBBA is very clear. For IBBA, Wealth Tax Act is different. That is for what you call banking institutions. Whereas, are you saying something? Not hear it. If you have any doubt, you can type it. So it is for insolvency process only. Okay. So in the insolvency process, you need company's loss for IBB. Insolvency and just one term. All others are under Wealth Tax Act. That you will get it from what is called CBDT. That is Central Board of Direct Taxes. Can apply that. For typing, can apply that. Because CBDT is going to the final, I think so. There should be some uniform. No? Maybe this will come under CBDT. But CBDT is formed, I know, it is for insolvency process and liquidation process. These are all general things. Many people have got this doubt. That is why I mentioned. I think it's good. Is there anybody who is doing CBDT works for banks, financial institutions? Huh? Hello? Is there anybody is doing valuation now? Yeah, not doing, you have to be updated. Your topic, whatever topic comes, updation is very important. Then only see if a case comes, maybe a lease property. You have to court judgment. That will give authenticity to your court. Only court judgments, whatever previous cases, that will give a special weightage to your. Okay. If there is no other doubt, we can conclude. What you say? I will just switch on. Can you switch on the?
So if there are no questions, can we conclude?
I don't know. Because there should be some, doubts in this particular area. But
Yes, yes,
people
yes.
are not. So that is we stop on the. Except I can see everybody. Okay, so I think you don't have much doubts in this particular chapter. We'll see after sometimes the new topic. I would like to ask you one more question. Which one you want? Which topic? You prefer to, whether it is land acquisition or any other chapters? But I don't want to do this one. Capital gain, because the rules are changing. So I think after this election, again, the rules will change. So that portion I don't want to touch now. Other things we'll see. I will try my best. Other topics. If you have any suggestions, you can tell. So, Namaskar ji, best of luck. Be a good value. I'm leaving my class. Okay.
Oh.
I think there is so much doubts.
Okay, okay, sir. Okay. So thank you, Kumar sir, for your nice, very interesting lecture. We could have a very fair idea of calculation of property tax. The topic was explained with the examples and very nicely. Thank you very much.
They won't find it interesting. If it is purely theoretical. So I know from my experience. So give more illustrations.
Yes.
So that they can understand how they are going to do it. Okay, anyway, thank you very much.
Thank you, participants, for participation. Thank you, Kajal. Thank you.
Kajal ma'am, thank you.
Thank you all.